Today we've got myself, Rochelle, and Dave Briggs getting in on the action with some color commentary from Emily McCormick coming in a hot second. And I'll kick things off here first and foremost today with the ticker symbol that I'm tracking, ANTM. No, it's not America's Next Top Model. It is the company that is now formally known as Anthem Health, as they are going to be going through a rebrand, this corporate rebrand. First step in the company's effort, they're saying, to optimize a brand portfolio. Of course, Anthem, Blue Cross Blue Shield, you may know them as those health plans, those names, they're not going to change, the company is saying. However, they are expecting to streamline. They're also announcing the number of other brands in the market. And so they also serve roughly 600 national employers, just as background, 1.1 million care providers and alliance partners, and then more than 118 million consumers. You were taking a look at the stock chart. Take a look at it over the past 6 months, up by about 31% over that time, and just recently coming off of some of its highs as well. So keep a close eye on shares of ANTM here, especially on this rebranding, doing it from a position, at least in the shareholder value, of strength as of right now.
And it does really seem to be more than just a name. As you mentioned, they're really trying to diversify their portfolio. We actually saw their name before that was WellPoint Inc. So a number of changes there to really reflect the direction that they want to go in. I mean, even back in 2019, we saw that they launched their in-house pharmacy benefits. So just basically expanding little by little and having their name reflect that. So it'll be interesting to see, as you have other competitors like Amazon who also want to broaden into the health space, to see where they'll fit in as well. So we're going to shift gears now and talk about the stock that I'm watching, which is Asana. Now, Asana, as you know, is a work management platform provider, and it had a tough day yesterday, a tough day this morning in pre-market. The stock was trading about 24% lower, and as you can see, pared back a little bit of those losses, but still down over 20%. Now, some of that came from mixed forward guidance, and that was even despite it beating on revenue. Now, JPM analyst Mark Murphy downgraded his rating from underweight to underweight from neutral, and more than halved the price target. That was a real killer there. And he halved that from $66 to $32. And he also took a look at that forward guidance for fiscal 2023 revenue growth. That's expected to be between 39 and 40%. They were expecting 67% when they saw that in fiscal 2022. So a lot going on there for Asana. We'll have to see how it bounces back. It was one of those stocks that was doing well during the pandemic. A lot of people at home, one of these project management tools. But as people return to work and they really try to look for more subscribers, they might have a tough time ahead.
Yeah, that's a great point. When you have a mobile work solution like this, it raises a large question of when you do bring employees back into that one-on-one or into that corporate office type of touch point, what type of retention are companies like Asana able to see on a go-forward basis, and how much of that growth did they have to pull forward, or were they able to pull forward because of the need and the demand that they did see? So a critical stock to watch, and there we were taking a look at just how far they've moved from some of those highs. 73% that I was tracking from those highs most recently. So we'll keep a close eye on shares of ASAN as well. And Dave, I got to bring you into the conversation here. What are you watching here today?
Well, my play is similar to Asana in that they could have a hard time ahead. It's how I started my day, and my play is Peloton, unveiling a new pricing plan today that is between $60 and $100. And how is this different? They're incorporating the bike in that monthly price, that $1,500 bike and $12.99 monthly subscription plan, now wrapped into one bill between $60 and $100. Now, for you new users, that's only Minnesota, Texas, Florida, and Denver, where you can currently get this new rate, but certainly an interesting play for those that don't want to have that $1,500 piece of machinery that have the sticker shock. This is an easy way around it. And if you do those hill climbs on Peloton, which I do, their stock looks exactly like that over the last 2 years. 2 years ago today, just about the same price they are right now, right around 20. They climbed that mountain to 165 and have fallen right back down to 20 bucks a share where they were 2 years ago. They are down on that news, but I think this is an interesting play, guys. I know, Rochelle, you are a Peloton rider. Would this encourage you if you're scared away from that sticker shock? I think this could give them the buzz they need.
Well, I got to jump in here on Peloton because I think when it comes to this company, of course, this is a really interesting pricing strategy that they're embarking on here. It's almost like instead of paying a down payment on a house and then having to make these monthly payments, you're just actually making the monthly payments the entire time. And I do think this represents some cognizance by Peloton's management of the consumer shift towards buy now, pay later. This isn't exactly buy now, pay later, since if a customer cancels, Peloton would still then take the bike back for free and you wouldn't have to keep paying this monthly fee. But it is still spreading the cost out into smaller chunks, which clearly with the rise of Affirm and other buy now, pay later platforms is likely to be enticing to many consumers.
Now, I feel some type of way about this because I was one of those people who bought a Peloton as one of those pandemic purchases. And when you look at that sticker shock, so now if you have one of those bikes and you're now seeing this much better deal now where even if you return the bike, it's no cost to you, you just get to return the bike, no problems. I mean, that's going to make someone feel a little bit salty. Now, me personally, I tried Peloton. It wasn't for me. I wasn't a biker before then. So I'm part of that group that's sort of, not helping Peloton when it comes to their subscribers. But I can't help but wonder if you currently own a Peloton and you paid full price for it, it's got to leave a bit of a bad taste in your mouth.
I think at the end of the day, one of the things that continues to come back to mind for me is the connected workouts that they're seeing. And particularly over these last couple quarters, they've seen that decline. And so with that movement that we've seen in the number of connected fitness workouts, and that actually on a decelerating path, if you will, I think for many of the users that are even thinking about upgrading, because one of the things that this company used to really hang its hat on was the amount of conversions that they were seeing between digital subscribers into those connected fitness subscribers. And for those connected devices, they were counting on about 20% on Anthem of those the digital subscribers to get into a connected fitness device. Now, as of right now, what we're seeing in the declining amount of workouts, or at least the average amount of connected fitness or connected device workouts, that is not helping any type of selling that Peloton is trying to do into what is going to take up, especially if you're in New York City, a pretty sizable part of your floor space that's in an apartment. And so at the end of the day, I think it still is going to come down to where they're able to sell into net new subscribers there. And if this new trial period is enough of a period of time for them to really decide to keep it for an extended period, even after that, and make those payments, which quite frankly are way higher than some of their competitors out there.
Yeah, it's still substantial. I think if you're an investor, you're still sweating a lot like me on the Peloton this morning. But as for someone, Rochelle, that did pay that initial full price, no, it doesn't make me bitter at all. I think for me, and I average this out over time, I think it's still a good buy. But I think what this will do, if you're in, say, Austin, Texas, and you look at what you're paying on a monthly basis, now you can just take that $1,500 off the table and say, I'm paying $80 a month to go to my spin classes. I can actually save money and have that bike in my house. And to your point, if it doesn't go well for you, you can just send that back. I think this is a good play. The one thing I've been waiting for Peloton to do is really play up their fitness app alone, even if you don't have a bike. It is very impactful for a lot of users out there that do yoga on there, that do meditation on there, and some great workouts. They've never really made a big play to just pitch that as a standalone service, which I keep thinking they'll do, but it does not appear that that's their play. I think this might work out in the long run.
Well, my one big question is how long do consumers need to hold on to this bike for Peloton to make a profit? If a consumer does stop after a month or two, they've just paid a couple $100s at most. And now Peloton does have to come in and take the bike back at no charge to the customer. So certainly something we will be watching here in the next earnings reports going forward for Peloton.